And welcome back, guys. Hope you can hear me. My voice is there, and sound is perfect. Okay, so let's talk about the market. Okay, we are having a rate decision today. Rate decision from the ECB. We had a rate decision yesterday. We haven't got a big moves. We have got Bank of Canada rate decision. We have got yesterday Fed rate decision, but we did not see the moves in the market. Okay, this wasn't surprised. This was possible. Now the risk event for today is the ECB, and the risk event is definitely the ECB, and I'm just waiting for my pen to come out. There you go. All right. So yesterday, what we got Bank of Canada rate decision, and then we got the Fed rate decision. Fed did not change the interest rate, and they said that they they they're gonna hold the interest rate neutral, and they're gonna hold interest rate neutral. So today we are having the ECB rate decision, and I mean it's already priced in that they're gonna cut the interest rate. So within the next 2 minutes, 2 minutes, we're gonna know that what ECB they're gonna cut the rate. That's already priced in. So they're gonna cut the rate within the next 2 minutes, and the question is how much bigger impact we're gonna have on the euro. And after cutting this time, how aggressively or how dovish ECB gonna be after this rate cut is the question. All right, like we know that Fed has paused. All right, so if ECB is going to say that they're gonna pause and gonna wait and see the market before cutting another time, all right, this gonna be a bullish for the euro, bullish story for the euro, right? So euro has already priced in for the drop for this rate cut, all right? So we are already having weaknesses on the dollar against the yen, as you know that we were expecting that. So let's just watch for the this for a couple of minutes, and then I will talk about the the market. Okay, then I will talk about what we can expect. So let's just watch it for a couple of times what we can have on the. So we got the rate cut, and the decision is there. Yeah, so they cut the interest rate. Okay, we did not see a big move at the moment in the market. Right, they cut the interest rate, so 2.90. So the press conference going to be important, but I guess it won't be much important. All right, it will be important, but I don't think so. This ECB going to be a non-event, all right? Yeah, so we need to understand the whole picture first, okay? The whole picture. What is the whole picture before you understand these events? What these events are doing? Why these events are not moving the market? All right. So if we will go back to the DXY again, Just for your reminder, let me look at the clean chart first. Where is the clean chart? So we need a clean chart. Okay, so before you understand that this event today, why we or yesterday events, why we did not see moves, all right? The reason is clearly shown on our chart, all right? So, uh, you know, Europe was facing slower growth, okay? So since October, and Donald Trump, I have spoken about that before as well, and Trump was setting up for the victory. Okay, since then we are having that move. All right, now Trump is in the office. All right, we already have rate cuts. Okay, so the policy divergence is happening right now. That the ECB is finding floor, finding bottom over there. Floor means they are getting close to 2% interest rate card, 2% inflation target. Their interest rate is coming close to that. So they cut today and they are at 2.90. Right? We haven't seen big move in the market. So 2.90 and 2%, just 90, yeah. I mean, just 90 basis point away from 2% inflation target. So they are just close to their inflation targets. Interest rate is coming close to inflation target. So who is away from that? The Fed, right? So Fed is holding 450 and inflation is 270, I guess, all right? And the inflation target is 2%. So they are the Fed, all right? The Fed. So market has already this move, we have seen that move already just because of this policy divergence between the ECB and Fed. Both were going towards different direction. ECB was cutting, yes, slower growth, euro was falling, and on the other hand, Fed was holding, Trump was coming into the office, tariff raise, all those things. Market was preempting all these things that gonna happen in January and February, and based on that, they were buying the dollar. So buying the dollar, and right now these events, yeah. So full this week was full packed with full events. Bank of Canada and even Bank of Japan, Bank of Canada, and we had Bank of Canada, I guess, last week, yeah, and then Bank of Japan, Bank of Canada, Bank of Fed, and today is the ECB. But market is not doing anything. So because these all these events were priced in already. Now, what market gonna priced in for this event? Okay, this is the event when market gonna start thinking about that ECB and other central bank, they have gone through this process, all right, the slower growth process. Their 2% inflation target is meeting, all right, but the Fed 2% inflation target is not meeting. And once they're gonna feel that inflation even is going lower than 2%, all right, their recent cuts are not going to push the inflation up. They will start they will cut aggressively, all right, and market will start pricing in. So this is the scenario. This is the picture where market gonna start pricing in future, right? Maybe a month, 2 month, or maybe in a 3 months, all right. And that's what we are looking, okay, for longer term. We are looking dollar to start pricing into that direction. Okay, there is one risk which is causing uh, you know uh, a dollar to not fall at the moment, or even Fed to hold rates higher, is the tariff. All right, tariffs. Trump is just threatening everybody that he gonna you know uh, impose tariffs. Yeah. So those tariffs are holding the dollar higher. So this is the picture, which is not letting the market move. I mean, where is the because of that? Okay, we are not having big moves in the market at the moment. So these events are more likely non-event, all right, not moving the market. Okay, so this is the news picture. So we are longer term bearish on the dollar, all right? We are longer term bearish on the dollar, and there is still a risk for spike on the dollar, all right? And the risk comes from the tariffs, all right? You never know Donald Trump what he's thinking, all right? He can say in the next hour he's going to impose 25% tariff on this country, on that country, or blah blah blah, all right? And only that single risk can drive the equities lower and dollar higher, all right? Another spike. So so this risk always going to be over there. Otherwise, based on the the monetary policy, all right, we have already seen movement into the market. Market has already priced in for that. Okay, now let's look at the charts, all right, and then we're going to look at the setups. And then we're going to look for the ECB, what ECB going to do, all right? ECB press conference. So in the last stream, okay, we were expecting Bitcoin to stay sideways. Okay, so we are still in a sideways daily chart. It hasn't changed a lot. Okay, but we are struggling to break through that 110 area, and the picture is still same. Okay, we still can go down from that top and can visit that low, right? So we still can again struggle over there like we have done over there already, and then can drag and again so buying within these areas. So holding these ranges, okay, 90 area and 110 area. So uh, right now we don't have any reason for Bitcoin to break through that top, all right? So we may get a sell and price can fall back to that low again. Okay, so if I'm gonna look at the Nikkei index, all right, so we got the interest rate hike from the Bank of Japan, and we got a sell off on the Nikkei index from that top. This is what we were talking about in the last stream. So what we can expect, right? We did not see the carry trade wind up at the moment. I mean, market is still holding on. Holding on means the interest rate has gone up in the Japan. Okay, we haven't seen the effect of this 25 basis point hike yet, and it is going to be felt, all right? It is going to be felt sooner or later. This 25 basis point hike is going to be felt sooner or later, and what we can expect on the Nikkei index to not break through these ranges. All right, do not break through that 40,560 area. Okay, and fall up to this area. Let's just be realistic. So just fall up to this low, and if things get worse, okay, then drag more up lower. This is going to be extreme. Okay, let's just fall up to this area. All right, so it has already dropped. If I mean, don't look for chasing this at current prices. It is not a, I mean, equity, this is not at a best spot where you can chase it to the downside. All right, so so we are still expecting it, Nikkei to drop. All right, Nikkei to drop and go down to to this low, or at least to this low. All right, so let me compare this with another chart. Okay, we can see that drop. We can see that drop. There is a possibility that this drop can happen. Okay, if we're gonna compare the dollar yen with it, we already got the drop on the dollar yen for our leg lower. Okay, so we got a interest rate cut. here we got a drop here. We got an interest rate cut here, and we got a drop. We get a drop here, and we got a correction. Okay, we get a sharp pullback, right? And dollar yen held. Okay, we got a next leg lower. We are testing this low, all right? And price can struggle here like it did this place, right? It can hold this area, okay, and can fall down. Very much similar like this. Okay, so we can see that leg lower here up to this place. Okay, very much similar like that dollar yen leg. So Nikkei is very much Nikkei is highly correlated with dollar yen and US 10-year yield. So if we see that the yield and dollar yen is falling, very much likely you're going to see the similar move going to appear over there on the Nikkei index as well. Okay, so we got the interest rate hike, we got a pullback, and then we are breaking through this previous low. Yeah, and this is what we were talking about in the previous stream, last stream. Okay, so we are expecting yield to go much lower in coming days, right? So we drop from 480, right? 480 to right now we are at 4 4 450, all right? Okay, so this leg can appear over there. May not may not break through this low, okay? But yeah, this at least this leg should appear. So Nikkei, or we can see that the Nasdaq 100x, you know, dropped more. Okay, very much similar correction is happening over there on Nasdaq 100 index as well. So I'm gonna talk about that Nasdaq 100 index as well. So I mean Nasdaq 100 index got this sharp sell-off, right? It got that sharp sell-off because of the deep sea news. Okay, actually the deep sea news was just a a hype. The actual thing is that the rate is going higher in the Japan. The free money is going away, which is causing these big names to struggle, like Nvidia and many others. They are having their market cap in trillions of dollars, all right? And now we can see that the free money is going away. So financing going to be expensive for these big names if they need, you know, funds in future. So they can be in trouble. They can be in trouble. All right, that's why they are the tech stock is feeling more hate than the others. All right, like Nvidia is having almost $3 trillion market cap. Nvidia is having $3 trillion market cap. Let me bring out the market cap. All right, so I have spoken about that before as well in the weekly market outlook, and I told you guys that we may not see further strength. Okay, we may not see further strength on the Nvidia, right? So it was somewhere here at these areas, if I'm not wrong, right? And I said that it can test this previous top or previous high, or slightly can go higher, but the way it was doing previously, the trending market, all right? So we may not see that trending market in Nvidia, right? This is the major stock which is holding the the equities higher, right? Because it's having almost $3.6 trillion market cap, all right? 3.6 trillion dollar market cap, and which has fallen up to. Um, you can say that. Let me check exactly at what number it has fallen. So from 3.6 trillion to 3.04. Yeah, almost $600 billion wiped out. Yeah, so the reason is very much simple. To push this for another $100, to push Nvidia for another $100, I mean it's running at 140, 123. So if you want to push it to let's say 240, right? So 240, you need another similar amount of market cap. You need more $3 trillion, right? To push it to to three to 240 means you need $600 trillion market cap for Nvidia, all right? Which is very, very less likely. Very less likely. It doesn't make sense. Yeah. So Nvidia to have that much market cap, or someone to spend that much money on just this single stock, or this single company, all right? Whatever whatever the 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 Nvidia is claiming that they are doing this or they are doing that, all right? That's not sensible. So $3 trillion is so much money. So a small hedge fund, just you can see there, just a small hedge fund, they dent their credibility with so much, I mean, a small hedge fund, they just DeepSeek, they just created their own, AI chatbot from China, and Nvidia lost 600 billion. Yeah, so they their cost was 93% less than the the chat GPT. So you only can expect that the cost for these new inventions only going to come down rather than going up. All right. So if cost comes down, all right, means that more efficiency. When you're having more efficiency, more efficient products, obviously, you know, stocks which are rising like Nvidia, all right, there are going to be more competition, all right? So more players going to be in the market, and less attraction going to be over there on these big names. So very less likely there's going to be a $6 trillion market cap, and you're going to have another $100 or $100 and 20 $120 move on Nvidia. So 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 this is causing the Nasdaq index to go down, all right? And we have got that sign. If you remember my last stream, okay? So what I said in the last stream, if you remember that, what happened in the last stream, we we figured it out that something was going to happen in the market, that was telling us the sign. We saw the signs, okay? If you remember this chart, okay, we were watching that chart in the last stream. Again, we saw this move, this move. If you remember that, let me pull out this. We figured it out that this move is going to happen. The risk of move was setting up, and equities was set to fall. In the last stream, I have spoken about that. Okay, so we had that chart. What happened over there on 24th of January? Okay, so we saw that the pound suddenly went up. Yeah, last week, pound suddenly went up. Euro went up. Pound went up aggressively against the New Zealand dollar, and euro also went up. Right, so we saw strength on the pound. We saw strength on the pound against the Australian dollar, Australian dollar is a risk on currency. Pound is also a risk on currency. Okay, but when markets start to prepare for risk off, when investors start to think that they are going to take their money away, so they start, you know, thinking that which country going to be more safe. If they're going to take their money away from assets like risk on assets like equities, okay, where are they going to park? Either they're going to park in bonds, golds, yen, chief, or all right, or other safe havens. So what they do first, okay, they take out from the higher risk assets first, okay, then the higher risk assets like equities, all right, and similar like when it comes to currencies, all right. So first they take out from higher risk on currencies to less risk on currencies, all right. That's how this divergence develops, all right. That's how this divergence develops. So New Zealand dollar was falling. Even we haven't seen drop on New Zealand dollar and Australian dollar. They were holding this top, if you remember the last week stream. All right, so pound was rising, pound was here, euro was rising. Okay, and we got a move here on these charts. These pairs were moving. So this move was telling us that this deep seek event is going to occur. Right, so the smart money started to move earlier. Okay, and then what we have got a drop on the Australian dollar, New Zealand dollar, euro, and then we started to see pound also started to come down. Okay, and then this move which we had over there last week, okay, so appeared this week on equities. Yeah, so I hope I'm not wrong. So we saw this deep seek event. Let me check the date first. So yeah, so Monday, there you go. Monday here. All right, and there we saw the fall started to come this Monday. All right, so last week we saw that the pound aggressively went higher against the Australian dollar, New Zealand dollar. And that was a sign, and I was telling you that, guys, this is a sign that we are going to see some risk off move. All right, we were looking for this. All right, we were looking for this one more push. We got that move, okay, and then bang. So the drop came, the risk of move came. Okay, so the point here, the point here is that the the I mean some assets they already start show you signs that what is going to happen with the others, all right. So you just need to figure it out that you know what they are saying to you, what signal they are sending you, right? So what they are telling you. So if you understand them, then obviously you can catch the rest. And there might be a question that if you know that, all right, if you know that this is going to drop, then why you did not trade, all right? It's a good question, all right? So it depends which pair you you pick, all right? Which pair you choose. Okay, so the trade was same. Either you take that on the equities or you take that on the currencies, all right? So the trade is very much similar. So it was a risk of trade, risk of move, all right? So we had a similar move, okay? The chart which is just shown here, okay? So this was also the trade, all right? This was also the move. So same trade, all right? So either you can take here, you can take here, or you can sell the euro dollar, or you can pick the any other any other asset where you are confident that yes, it will go into your favor, all right? So the trade was very much similar. So the pair which I was talking about in the last stream was the dollar yen, all right? Or in the last weekly market outlook, I have spoken about the dollar yen, all right? So the pick gonna supposed to be the dollar yen. So the reason why dollar yen, because dollar yen was having multiple reason to fall, not just one reason to fall, all right? Dollar yen was having multiple reason to fall. Bank of Japan, all right, tariffs also going to drive the dollar yen lower, equities lower. So not just one reason, so multiple reason was there for dollar yen to fall. And dollar was also up for longer term, and dollar has to fall for the downside. So yeah, so trade was very much same. It was a risk of trade, all right? So it depends which pair you pick. Even bonds, uh, a treasury note was a buy, all right? Treasury note, this was a buy. So the treasury note was a buy, all right? And this was a buy as well. So the trade was very much same. So we were focused on dollar yen. The dollar yen was a go-to chart for that. We got that move. We got the dollar yen to drop here. It went higher. Okay, we got the drop, went higher, then again held that, all right? Went lower, again went higher. So a couple of times dollar yen has given you the opportunities to to drop, all right? So now let's get back to the to the so we were talking about the Nikkei index, all right? So we can see the drop, okay? We can see the drop here on the Nikkei index. If you're looking to trade on, be very careful, all right? Trying if you want to sell it, try to get into the trade at this place, all right, and use stop loss and look for this to drop. If it drops, bang, okay? If it doesn't drop, get out. If breakthrough, get out. Don't hold that trade, all right? And the the US 30, all right? So US 30 is pushing higher, nicely bent higher from this low, right? So it's made a good move, by the way, US 30. And we have seen the drop, okay? Similar drop which I was talking about in the yeah. So if you remember my copper charts, the copper chart which I was showing you and telling you that the copper, we cannot ignore the copper, yeah. We cannot ignore the copper. Copper was telling us that this market is going into a different direction when we had a very strong move on the US 30, all right? And I was telling you guys, copper is telling us that the whole gains can be removed, right? So it removed whole gains and then went higher. So it removed and then went higher. So what we can expect now, right? Not much. It's an all-time high, just a short-term push-up on lower 3-minute time frames after having opportunity after having set up. We'll see if we're gonna get 3-minute opportunities and we'll look for, okay, but not much left on the the Dow, all right? Because the Dow is about to find new all-time high. Okay, this whole move is and we were talking about this move since price was dropping, all right? And we were looking for that here, and suddenly we got a crash. We were still looking, this whole move was coming down. We were looking this whole move coming down, all right? And finally you got that leg, right? And Nasdaq 100 is slightly different, okay? Right, slightly different. On lower time frame, we were talking about this to break through, okay? But there was a risk, okay, simply for this to go down. Like Bank of Japan was raising the interest rate, so that was a risk it to go down, to bring it, I mean, to fall. What's the risk? What's the the probabilities now? I mean, what we can see. Okay, what I said on the Nikkei index, I said that Nikkei can fall for another leg lower. Okay, this can fall for another leg lower. We are not trading on this at the moment, not selling, not buying. Okay, we'll see what we're gonna have on it after. I mean, where we're gonna look for? We're gonna watch it. Okay, here, what we're gonna have? Either we're gonna have buy opportunity here or not, or we're gonna have a sell opportunity here on it. Okay, so it can go either way. It can go either way. All right. More likely, we're gonna see that the Nasdaq index gonna follow the US 30. Right? All right. So US 30 is pushing higher, going higher. So more likely, we're gonna see that the the Nasdaq index gonna follow that. All right. But have to be little careful. Similar. All right. Similar. Don't need to talk about that a lot. Similar scenario. Okay, and the dollar index is very much similar, yeah. Okay, similar like last time, like last weekly market outlook. All right, so my throat is not okay, guys. That's why I'm talking really slow. So that's why sound is slow. So the the DXY, okay, the DXY is hasn't changed a lot. Okay, we are still looking for this wedge, okay, so hasn't changed, the bigger picture hasn't changed. All right, and the dollar CAD is also hasn't changed. Okay, we are still looking. I'm gonna remove all these things. All right, so there is a risk for the tariffs. Okay, make sure you keep that thing in your mind. Okay, and looking for sell opportunities. Okay, from these areas. These are the prices you are watching really closely. Okay, and looking for these trades to counter it every time. So use stop loss. Okay, spike up is possible. All right, so spike up is possible. Looking that trade, we are having ECB rate decision now. Okay, there is the the point here. Okay, right now what I see, what opportunity I see, what we may see on this euro. Okay, so euro, what euro can do? Euro can simply go to this. Okay, we can go this area. All right, we can claim that top. The the opportunity 100 pip move, we can all right, 100 pip move can appear over there on euro dollar. All right, this move can appear over there. Okay, now let's talk about that. So this is what you are looking. All right, so let's just make it. All right, let's just make it this chart little clear. Okay, so the leg which I was talking in the previous last stream, yeah, the leg was led by the copper, this leg. Okay, before we look at it, look at that. This is the yen. Here we're gonna look at this chart. You're not gonna understand anything on this chart. Okay, but what we see opportunity here. Okay, ECB. Let's see what Lagarde says. Okay, Lagarde is about to speak, I guess. Yeah, she's already speaking. I'm not sure she's speaking or not. I guess she's already speaking. Let's check if she's speaking or not. Okay, but this is the opportunity we are looking. This is the leg you are looking. So this simple analysis will tell you that what you are expecting on the rest of the market. Let me check if she's speaking or not. She's speaking, I guess. Yeah. Yeah. So started already. So it's, I mean, 6-7 minutes away now. But what we see, we don't see any movement into the market yet.
Consumer confidence is fragile.
All right, she is speaking.
And households have not yet drawn sufficient
But
encouragement.
we don't see any movement in the market yet. All right. But this is the move you are looking. All right. That's the trade. Okay. Even the ECB has cut the interest rate. The move is clearly shown that this is going to happen. All right. So the dollar yen already showing us that this move is going to happen. All right. We just need to invert that chart. Look at that. Okay, so you look in that move. Makes sense now, yeah. So dollar yen is breaking that 27, or breaking 27 lows, right? And euro is still not reached to that 27, and we are going into that direction nicely on the dollar yen. Okay, so this is the trade. So we got a nice move already on the dollar yen. Okay, and you are expecting euro dollar to follow up. And once euro goes to that direction, you look in pound to also do that. Right, so yes, the same. Nothing secret now, anything over there, all right? Yeah, this and these charts also do the same. Okay, this top, this low, all right, and that trade. Yeah. Okay, so this top, that low, and this move. Okay, there are so many other lines and structures, so I'm not removing that. It's gonna take time to remove that, so let's just go quickly. Okay, now gold can break through. So in the last stream, what we were expecting on lower time frame, if you remember, at this area, gold to drop. Okay, this move, we got that move. Okay, we got that move. So we got that move, and then it's just going higher again. So gold may break through that top, all right? Gold may go through that higher or may find all-time high. Okay, we may not see the sell on the gold at right now. We'll see. We'll track it on lower time frame. What a lower time frame is doing. Okay, like like we saw in the last stream. All right, last stream we saw that the copper went down, and then we saw that the gold was also a short opportunity over there. So okay, so if we get a lead again from others, okay, we'll look for gold too. But right now we can see that the dollar is dumping. Dollar is going down. So gold may break through the top and can find a new high. Okay, but on a bigger time frame, yeah, this bigger time frame is still the same. Still same, the bigger time frame, yeah. You still can. I'm seeing it. Mhm. I'm seeing to form a new all-time high. The reason is that because euro is still lagging, right? So euro has to catch up the dollar yen. When euro catch up the dollar yen, all right? When euro goes high, it's catching up very quickly now. Okay, and this is what it's gonna do, all right? I mean that's what we were expecting. So it's gonna go higher. Okay, so stronger euro, stronger other risk currencies will also gonna have some impact goal to push more higher, which can break through the previous top, and we can find another all-time high on gold. Okay, so if you think that gold gonna hold, you should start looking to sell on gold. Okay, you may start selling it early and can get trapped over there. So don't start looking just based on the top, right? And there you go. So silver also started to catch up. Silver is also going higher. So this is what we were expecting. We were expecting it to just catch up, go quick, hit the high, right? And copper to go higher to similar lag. All right, that similar lag to form. All right, that similar lag to form too. All right, so go higher and okay. So I just need to put this line here. Okay, and this line here. I hopefully you understand by putting these two lines that what is your trade. So what is your trade on this chart? Just type it over there in the text. So which trade do you see on this chart? There is a trade, okay? There is a trade on this chart. Which trade? What should what should be the trade? What trade do you see in this circle? Buy or sell? Just type it over there in the chat. Just type it over there. What trade is there? Sure, yes, you cannot buy it, yeah, because dollar is falling, right? So dollar is falling. So you're gonna buy it, you're gonna get stopped out, right? Because price not gonna go there. The dollar is falling, right? There's a clear trade into this direction. Okay, how do we know that the trade is to the downside? Because of one is the dollar yen as well. Okay, so dollar yen is also a reason. I mean, you can use that dollar yen. Okay, so all right, so there on this low, we find a we find a drop over there. Then we corrected, bang, dollar dropped against the yen. Okay, but dollar hasn't dropped against the chief. Okay, and the dollar chief is highly correlated to the euro. All right, and what euro is doing right now? Euro is catching up the dollar yen. All right, so we got that. We find a floor over there, dropped floor, went higher, dropped. Okay, went down on the euro. The euro is catching up because of the ECB. All right, and dollar chief is just still, stand still, not moving. All right, dollar chief is not moving, so dollar chief to move to, yeah. So there is the opportunity. So you watch euro dollar. If euro dollar keeps moving, okay, then dollar chief to follow up. I'm gonna ignore this. I'm gonna ignore this too, right? I'm gonna ignore these charts. These are very important charts, but I'm gonna. Okay, so we got the new. We went higher on the Euro Australian dollar. Okay, we're still gonna watch them really closely, but these charts are sending a signal. Okay, if these charts, right? We're not gonna. I mean, ignore these charts. Okay, I mean we are testing their high again. All right, this high again. We're testing their high again. All right, and on the other chart, Euro New Zealand dollar, we are also going back up and testing their high again. Right, so we are very far away from their high. Okay, but if you see that this is keep going higher, all right, and if you see that this is keep going higher to that, okay, that means we are going to see another leg higher on the dollar. But right now we are not looking that at the moment. We are looking for stronger risk on currencies. All right, like I have just shown you, the euro to catch up the the dollar yen. All right. Okay, so I'm gonna quickly go to the chief. Okay, so chief is dropping, which is a good sign. All right. So yeah, finally this flat formation appeared over there. Yeah, we spoke about this in the weekly market outlook, and then Bank of Japan rate decision came, and we are dragging lower. So I'm still anticipating this to just keep dragging lower. Okay, there keep dragging lower. The lower it goes, the lower it goes, the lower chief, the lower chief, the lower chief yen goes. Okay, means that we are going to see drop on the not just chief yen, all right? So, I mean, the higher yen goes, so means that we are expecting dollar yen to continue to keep falling, all right? Once dollar yen moves, okay, then we are expecting dollar to fall against the other. So that's the bigger picture, okay? But is chief going to fall to the downside for longer term from here? Yes, that's the question, okay? That's the question we should look for, okay? We are expecting this bigger move, okay? Now we shouldn't expect the policy divergence between these two banks anymore. The the Bank of Japan and the Swiss National Bank. Okay, let's just find the, is there any divergence in the policy? Okay, so there you go. There is the key stuff, all right? So so the inflation went higher, inflation went higher, inflation is falling, inflation is falling. Okay, but inflation jumped here. Bang. Okay, the interest rate. There is the okay, so there is the policy divergence. So we are at 0.50 interest rate in the Swiss. Okay, the inflation is 0.6. And what happened here? I just added the percentage. Okay, so the interest rate in the Japan is also 0.50, means that the interest rate is same like the interest rate we are having in the Switzerland. So there is no interest rate differential at the moment at between these two banks. So both having same interest rate. Okay, who's having higher inflation? The Japan, all right. Japan is having higher inflation than the Switzerland. Okay, so what as the Swiss National Bank is saying, they're saying that rates can go to negative again. They start saying that rates can go to negative. Okay, what Bank of Japan is saying now? They are saying that rates can go further higher. All right. So the Bank of Japan policy was lagging. All right, than the rest of the central banks. All right. Now, Bank of Japan is raising the rate. Inflation is higher. They are talking about the 2% inflation target and showing little concerns about the inflation. Okay, little concerns about the inflation. So the policy divergence we were having before between the Swiss National Bank and the Bank of Japan, right? That was causing the Swiss against the yen to just keep rising, right? That this yeah the inflation went higher, they started to raise the interest rate quickly, bang, right? Then dropped, right? Inflation dropped, they started to cut. Now they're saying we can go into the negative territory. Okay, but Bank of Japan is saying something else. They're saying that we still can raise the interest rate. So this policy divergence means that we're gonna see a bigger move here over there on this chart. Okay, there is no interest rate differential anymore between these two banks, all right? And yen gonna be a more favorable over chief, okay? Because Swiss SN, SNB is saying that rates can go into negative territory. Yes, if the rate goes into negative territory, this is where rates were into negative territory, all right? So in 2020, okay, rates were negative in this area and at that time, 2020, all right? So huge move can appear over there. So we had a huge potential over there on the chief yen in longer run, all right? And right now we are expecting it to, all right? So right now to fall up to this and then go to this, all right? So this story, this logic applies to others as well, all right? But not I mean, some banks are still having higher rates, all right? But this chief has to fall against the yen for a big time, all right? So for our time frame on other yen pairs is same. Okay, euro yen is also going down. Okay, so go down. Same like the chief yen. Okay, nothing has changed. Pound yen to go down too. All right, same trade. Dollar yen. Dollar yen went lower. All right, so I need to change a little now. Okay, so you're still expecting it to just keep falling. Okay, we may struggle to break through this low again. Okay, but you never know that the rate is higher now in the Japan. Okay, and carry trade still can play out. Carry trade, they still can wind up. Yeah, we still can see another 4 hour time frame push higher before we're gonna get a drop. So this is your recent update. Okay, we have to stay below those moving averages, stay below these trending and moving averages. Okay, so if price push back and struggle within these areas and then fall. Okay, so CAD yen is also going down, very much similar like that, like the dollar yen. Okay, continue or push up and hold that, and then there's Uzi yen, not a best chart. Okay, it has already at the floor. It's already at the floor. Okay, floor. All right, so I'm gonna leave the others and 10-year yield. All right, so 10-year yield to fall. Okay, 10-year yield to fall. So 10-year yield to come up to 415. There is only one thing which is holding that quick sell off, all right, and that's the Trump tariff threat. Okay, Trump, either he is going to impose, yeah, he, okay, so what I believe that there's going to be a tremendous pressure on Trump after a couple of months, all right. Right now what's happening, Trump in the office, all right, it Trump is Trump having early days in the office, all right, and things are changing in the world because New administration is there in the office, and Trump is threatening everybody, every country. All right, and countries are being threatened. All right, they are not taking action against the Trump at the moment. Now, what's going to happen? Soon you're going to see that countries going to start aligning together against the Trump. All right. Soon you're going to see that more and more countries going to start aligning against the Trump, and Trump may feel, you know, alone, right? And and can back off from its threats. All right. So right now, even he's threatening his allies. All right, his close allies. All right, and these allies they can uh, align against Trump, right? And then Trump gonna be in more trouble in coming months. Okay, we're gonna see that blocks gonna start building up to face the Trump tariffs. Okay, and then we're gonna see that no one gonna take more serious these Trump threats. So market is reacting to that right now because he's in the office, and these threats are new. Okay, slowly we're gonna see that market gonna start you know gonna start gonna use to it, all right, and not gonna react to these threats the way it is doing right now, all right. So yield is being held higher because of those threats, empty threats, all right. I'm you know I'm using the word empty threats. These are just empty threats to get a favorable outcomes. So Trump is using these threats to get a favorable outcomes. Yeah. So little, if we see that the Trump is going to back off a little bit, back off from these threats, we're going to see that this yield going to plunge very, very aggressively to the downside here, or all the way to this 360 areas. All right, 360 areas. So even, you know, even Trump, that even Trump is saying that, you know, rates are higher, okay, and Fed should bring down the rates. He knows that the borrowing cost is very much high and it shouldn't supposed to be there. It should be down, okay, and soon you can see that the Fed gonna start feeling the pressure as well. So yesterday, Powell was being asked that have you been reached by Trump to lower the interest rates? So Trump just you know dodged that question really well. So soon you're gonna see that there's gonna be pressure on Powell as well to take action. So all these roads are pointing out that we're gonna have lower yields. All right, lower yields. So lower yields. All right, lower yield. So what lower yield means that the 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 bond features to go higher. Right, so bond features to go higher, so they are already pushing higher, so go more higher. And Nvidia, right, so Nvidia also can go back up, right, also can go back up from this low, so still a buy opportunity. So during the New York session, you're looking into this trade, all right, which is already pushing higher. Market is just about to open. New York session is just about to open. This move, you look in this trade, all right, this when it opens this trade, and if it keeps pushing higher, then go all the way. Let me check Apple. All right, so yeah, Apple is taking the edge, falling Nvidia causing Apple to go higher. Okay, so Yeah, so yeah, if test this low during the day, during, I mean, market is just about to open, all right? Yeah, looking to continue the trend, right? Where, I mean, it's the pre-market price is here at this area right now, 237, all right? So yeah, just go higher. Microsoft is not a good. I'm gonna ignore that. All-time high. Ignore these. All right, so enough for these. Okay, so what we're gonna watch. All right, so as said that you're watching the dollars. All right, so the dollar to go higher. So euro is pulling back. All right, which is a good if you haven't caught the trade and you're looking it to go and test that top. Okay, so what I'm gonna do now, I'm gonna turn off the stream and I'm gonna live back again. I'll post the link where we're gonna watch the market. All right, where we're gonna watch these setups how they are developing. Okay, this was the weekly market outlook for this week, and which is supposed to be a couple of days earlier. But anyway, all right, so we're gonna watch the market later on. All right, so this is still a bullish. Let me check. All right, the euro is still a bullish. All right. Okay, so watch it, and there were some dovish comments from the Lagards which caused that to drop. All right, so some strength here. Okay, what we see, what we're gonna do, we are still expecting this. Okay, if we don't get that move, and euro just keeps sliding over there, all right, and remove these gains, all right, then there's gonna be a sell opportunity here. Okay, but this trade gonna be then if we see these losses here. Okay, if we don't see these losses, there is no trade. Okay, we only gonna look for buy. Okay, so I'm gonna stop this stream and we're gonna live it back in a couple of minutes.